Everybody, morning. How's it going? Here we got FOMC coming out today. I don't think anything is going to happen. Basically, probably going to hold rates steady. Probably going to do it. We don't have any room to cut. How can I say that? Well, if we cut a quarter point, we'd be at 4.125. Right there. We're, the rate is it's a target rate between two numbers. So right now we're 4.25 to 4.5 right there. So the average is 4.33, and if we cut a quarter point, we'd be between 4.25 and 4, which would be here, and that's too close to that number right there. That's no room for error. We've already been above. They already, when we first cut down in here late last year, we already spiked above this, and I think they're too cautious to cut the rate down to this level. I don't think they'll do it right there. So I think we'll just leave it. Hold is the best policy at this point, and I think they'll just set the rate and leave it. Like, heck with these economic projections and all that sort of stuff. But I digress. They're always chasing the rate. They're not setting the rate. If you've never seen this before, this is the DGS2, Delta Golf CR2. Just go to TradingView, type in it up here at the top, DGS2, click this compare button, type in FED, FUNDS, Fed Funds, add it to the chart. That gets you the orange thing right here. So we've got the 2-year constant maturity rate in the blue. And we've got the Fed Funds in the orange. And as long as I've been trading, this is a weekly chart. As long as I've been trading, they've been chasing. I've been trading with real money since back here in the 90s. And the Fed chases the rate. Look, it chases it down. Overperformed. Like, oh, rate's going back up. We got to chase it up. Chase it up, chase it up, chase it up. And the rate peaked. And then came back through, and they're like, oh, crap, got to cut. Hold. And we were just kind of parallel. Then the rates went down. Oh, Fed chases it down. Rates coming back up. Oh, Fed chasing it back up. And then we had a crisis right there. And the market rate plummeted out, and the Fed chased it all the way in the bottom. And we started zero interest rate policy for the first time. And then the rate started climbing. Fed started chasing. And we had another market freak out. This was all one big correction in the S&P. So there you go. Are your captions on? Well, I don't know what that means. So there we go. I'm not reading a script, so there's no pre-done captions to this. And after that 2007, we came back down, zero interest rate policy once again. Market rate just kind of banging around. And then it started climbing, and we had to raise rates again. And look at that. Another market freakout. Back to zero interest rate policy. But then inflation picked up, and the market rate took off. Right there in the middle of 21. It started climbing. And then it really started climbing. So got to be careful right there. Craziness. Now, when we got up here, I speculated that we would have a period of sideways. For how long? I wasn't sure. You can go back. You can go back a couple years and look at this. I've talked about this for a long time now. Where in the videos? It's gonna be hard to say, but I've talked about this for a long time. That probably gonna go a period of sideways, and then experience a climb. This is the thing that nobody's really predicting. Nobody's been predicting over here. We just thought we'd climb up here, get inflation under control, and then cut back to zero rate policy. In fact, I had a bunch of friends buy houses and stuff, counting on the fact that they were going to be able to refinance when interest rates went back down, because that's what the mainstream media was telling them. This thing's going back to the bottom, right? Be able to refinance down here, no big deal. Now, this is not the interest rate for a house. This is the Fed's interest rate. But so far, that's not happening. In fact, mortgage rates climbing right now. Wow, this is just kind of humming along. Humming along. They probably should have stopped right here. That was where I thought we should have stopped. We raised 2 more times. That may have been a policy error and compounded what's about to happen. But here we are right now. So unlikely to cut at 2 p.m. today. Probably just going to sit on it. We might have more. I guess the real tell will be, do we have more hawkishness or do we have more dovishness? Dovishness would be toward cutting, but hawkishness would be toward raising rates again. And keeping an eye on the DGS2 here. If the DGS2 starts climbing up through 4.3, maybe above 4.5, we may see them have to actually raise rates in the future to get, we may see inflation come back again. That's what this is indicating. We've got a kind of a stagnation right now. Housing starts, lowest levels we've seen since COVID. I'll do the disclaimer in a second. Where'd those housing starts go? Yeah, housing starts, that was Canada's. Remember, tomorrow the market is closed. It's an odd, weird Thursday close for the market. Futures will be open, but the regular equities market's closed. Crypto, of course, keep going. Yeah, I can't remember where I saw the housing numbers. The housing starts, permits, epically low. Epic. Yeah, there it was, right there. Right there today. Building permits. Getting down to levels. Permits are still okay. Not great. We had a dip down here. We're still above that. But we're starting to encroach on this dip down here. Now, we were at a level back here in 2018, 2019 that was only 1.25. So maybe not horrible, but the housing starts. That's where we're starting to dip right there. I've got some housing clients in the engineering business that are struggling. There's just nobody contracting for custom houses right now. So, So we'll see what happens on that Fed funds rate here after a while. 2 p.m. I'll probably, for channel members, if your name's green and you got a star, I'll probably do a FOMC live, probably start 5 minutes before 2, and we'll just kind of watch the market. And I may wrap up at 2:30. I don't know. Depends on if it's spicy or if it's just boring. If it's boring, we'll just wrap it up. We've done that the last few. So all trading involves a substantial risk of loss. Past performance, of course, not necessarily indicative of future results. I mean, that's trading for you, right? This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries, bonds. If you desire personal financial advice, you want somebody to tell you what buttons to push to make some money, go hire a financial advisor. Make sure you trust them. This right here, my 50K challenge account. Booked another winner chicken dinner. We're going to take the first loss today. My VIX contracts went out for 0, so that's going to knock that down about $400 right there. Then it'll nix that 100% win rate. So my insurance policy expired worthless. That's what you like on an insurance policy, right? I mean, nobody loves to collect because your house burned down. So, no big deal. Got the next one in place. Cover me out till September. See what happens. See what happens. So the goal here, in case anybody hasn't seen this before, right here is my monthly. The goal is to get that number to 50K per month consistently. When I click on the 1 month, when I click on the 3 month, it'll be 150K. 150K. That's the goal. Right now, when we click on the 3 month, we're at 6.28. Not bad. 3K a month average, because we've only been doing this 2 months. Right here. We don't have 3 months worth yet. We just have 2 months. Not bad. Not bad at all. So the crowd is light today. Where'd everybody go? Anyway. How do we make money today? That's what everybody wants to know, right? How do we make money today? S&P 500. In for more chop, it looks like. Let's clean some of these fib lines up. Let's look at where we're at. Where we're at, if you will. So right now we have dropped off this high. Kind of a three-way fashion. This high we made on Monday. First move down, second move down. Very proportional here. This is not impulsive so far. Now, could be a 1-2, 1-2. The proportions there are very similar. See that right there and that right there. Very consistent. So this could be a 1-2, 1-2 start. And very, very nice right there. Very nice right there. That could be a nested setup. And we could see a big knee-jerk negative reaction on FOMC today. Excuse me. So what that might look like... Oop, clicked the wrong thing. Clicked the wrong point. 1, 2, 3 points right there. We could be looking at something that goes down in here on the next move pretty quickly. So that's a concerning pattern. This is the futures. If you've not seen futures before, this is how we know the S&P was going to open slightly green, because these were slightly up from the close yesterday. So S&P opened slightly green, and we've got a first move down, 5 waves down, a retrace very deep, first move down. This could accelerate. We could see acceleration of this very quickly down here, and something like that. We'll get into my bias for the day toward the end, but so far looks like we're building a correction. And NASDAQ, kind of the same pattern. More the same. Holding that downtrend of highs. We did poke through, tried to maintain it, couldn't do it. Couldn't hold on to it so far. 1 day up, close, and right back down. Now we're underneath. We'll see. Trend line is, of course, the weakest of technical analysis. But we poked the bear. Just got slapped right back down. If we break down, probably going back to, at least back to the daily roadmap line right here. Now, I'd kind of prefer that over just going higher high, because if we go higher high on the S&P, that completes the 2007 market topping pattern. So possibly we just get a retrace. Don't complete the 2007 pattern. That would be kind of my preference. And if you've not seen it before, this is the pattern I'm talking about right here. It looks eerily similar to what we've got going on here on the S&P. Look at this. See how this chopped? See how that chopped? Then we had a big drop. We had a big drop in 2007. We went back, made a new high. We didn't do that yet. And then what happened next? A 57% correction in the S&P that took a couple years. That's why I've been very cautious about this whole climb out of this right here. If you've been listening to me and you're overly bearish on the market, I apologize, but I'm very cautious big picture, because this could be the start of something that lasts 5 or 10 years and we don't get back up here for a long time. And I feel like I need to beat that drum that this is a dangerous pattern right here. If we complete it with a higher high without doing any kind of correction in here, and we make it look just like we did in 2007, I've seen this pattern show up on multiple time frames. This is a topping pattern. This is just a snapshot of the S&P 500 from back in 2007, late 2007, right before we did a 57% correction. And that's what we got cooking. Same freaking pattern. I mean, scary. Make it the same size. I mean, that looks the same to me. If we spike a higher high, could kick off a 57% correction that takes us down below 3,000 on the S&P. Could be a bigger correction. Might be a 618. We get that, right there, 58% down to 2,500. Be back at the COVID lows. Well, that'd be a crazy 5-year, 6-year round trip. Anyway, got a little bit of cough going on here. Excuse me. So, NQ, more the same. Russell, a little bit different pattern going on here. This thing might get spicy to the downside. Put my big chili pepper on here. We've kind of been, this thing keeps adjusting too. Not my favorite. We've been riding this uptrend of lows, but we poked through it, kind of back testing it here and sitting right on my roadmap line. If we break down below that low we had from Friday, I think we're going to go on a bigger trip down. Things get real spicy real fast. Real spicy real fast. Now, it's going to be an interesting dynamic here, because we have the market, and we have this big FOMC meeting thing today. Market close tomorrow. Biggest OPEX probably of the year so far tomorrow. That's an options expiration. VIX expired off today at the open for June. So this is going to be, it's going to be an interesting wrap up to the week here. Oil broke out the downtrend of highs here. Had this cooking for several years. It's downtrend highs. We broke up. Came back down below, pushing back up. If we can get the mustard, we get the mustard to go higher. Muster up some energy to go higher, that is. Past the mustard. Probably going on up to 100 on oil. Gold. I'm not feeling a breakout right now. I think this is corrective action off of this high we made back here in April. I think we're going to correct it back to the daily roadmap line. that doesn't negate poking slightly higher. Like that can still happen, and this can still all be a correction. It just could be a very bullish correction. And then we go shooting off to ridiculous numbers. I saw something before I went live. Let me pull up something and see. Let me pull up something. Yeah. Look at this right here. Oh, we've talked about this one before. Let's see. Let's pan this over. Look right here. Dollar to gold ratio. Dollar to gold ratio now. $8,900 per ounce. That's kind of interesting, I think. Gold's only $3,000 an ounce. And paper to silver ratio now, 364. Dollar to silver ratio, $1,100. It's kind of interesting too. I don't know that we're going that high. The chart doesn't suggest we're going that high on silver. But there is kind of a leverage situation going on. A shortage. Could have a big short squeeze. Or maybe just a supply squeeze is more accurate right there. Kind of interesting. But this thing probably needs a trip down here before we go much higher. We've been on a pretty epic breakout journey here. Pretty crazy. Needs to take a little rest. We started this correction back here, made this bottom, had a 1-2 start to the bottom. And we got going here. Got going, climbed up here, but we need to take a little break before we can go even higher. Just a matter of, does it happen right now or not? So Bitcoin, cool. Still working on that correction. Funny enough, somebody said that we might need to do a correction. What the heck was that? So we did a first move down. That was right over here. Did a retrace. So Control copy, Control paste. That puts us right here. Then we have this right here. And the next move might take us right down in here, bounce, and then get the final move right down like that. That's what I'm looking for on Bitcoin. Might wrap up down here sometime late next week, maybe. NKD, filling out this little triangle flag thing. Keep running it. Got a few more days, and then we'll either break out or break down, or maybe both, or possibly just go sideways and shrug and say, forget the triangle thing. I mean, 3 possibilities, and none of them are, some people are like, ooh, that's a bull pennant flag. We're going to break higher. And the market loves to, when people see that, loves to rip them. And so we'll see what happens. I used to try to trade candlestick patterns. It just didn't work for me. Price patterns work, ratios, what works for me. This right here maybe bottomed. I'm not feeling high confidence here. We came up shy of the ideal downside. I mean, we can do that, and that's fine. Resistance up here at 102 right now, 102.50. So if we can break out of this kind of downdraft we've got going on here, we'll probably rally the dollar back up to this 102 area and see if that resistance holds. Somewhere in this zone up here. And if it doesn't hold, I mean, if we rip right on through, we're going back, probably make a new high. It could take us on up here. We've got this long-term downtrend of highs. We'll have to break through, of course, up around 112. But we could take the dollar up to 130. US dollar index. Now, the alternate is that we crush below that support that we did, we didn't spike down into it yet, but we come breaking on down through it, and we come back to the lows that we had back in 2021 before we took a trip higher. Mag 7 stuff. Everybody loves the Mag 7s, right? Biggest, awesomest companies out there. This one, same sort of pattern as, it's got that pennant flag thing. If we can break higher, resistance is right up here. If we break lower, well, that would be the high. First move down. Second move down puts us down around 140. Somewhere down here. Golly. Amazon, first move down, potential for a second move down. Be very cautious on these. Google, same situation. First move down, potential second move down. Down here, 120. Meta, first move down, stalled out, potential second move down. Might just be a revisit of that 470 low, 480 low right there. Microsoft, the only Mag 7 that's doing something different. This one highly likely to spike up there, 489. Probably going to do it, 480s, 490s, somewhere in there. NVIDIA has a whole different thing going here. Potential head and shoulders, and first move down, second move down potential. And if we break below that, could be in for a big, swift extension lower. I know lots of people not thinking that's going to happen, but guess what? Down to the 40s might be a real possibility. I had a support zone all the way back from before we went higher, back here in the 70s. So we may come down in here, bounce back up, and then roll over. Even Tesla has this potential first move down, second move down potential in the chart. But when you look even closer to current price action, we've got this first move down, potential for a second move down, hold support, and then launch off to new highs. Coming up Sunday, unless they punt again on the 22nd, supposed to roll out Robotaxi in Austin to the public. They're very cautious. They don't want any accidents, any problems. So they're trying to make sure it's a perfect launch. Perfect. I don't know if you can do anything perfect in life, but look for a perfect launch. That new business segment could take this to new highs, but failure could take it down to the 160 area. Caution is advised. So I go pull all the gainers. Things are moving $2 or more up. Put it on the gainers list. $2 or more down. Put it on the decliners list. We hunt for some opportunities to get into stuff. I don't pre-look at them. So I don't know which ones are the best ones. People are like, just cut out all the crap and just, like some of the comments I get, just cut it out and, streamline it. Just show me the few I should pay attention to. That's not really the point here. The point is to try to teach you how to filter through and find the good stuff. So we start with a chart like this and we draw the fib lines on here. And if this closes up here, it's confirming that it might go back higher to 84. So this is one, if it interests you, keep an eye on this one. And it's not a historically very strong one, but doesn't negate this one from working out with an upside pattern here. It's almost a $9 upside from where we are right now. And Valerie, the request shows Tuesdays at 5 p.m. I don't usually take requests in the morning. We got plenty to hunt through. GMS looks kind of like a first move down, potential for second move down. Off of that resistance. Now, if we get above it, 114 would be the upside here. Circle. This one just keeps being crazy right here. Do you believe the world is going to adopt stablecoins? The stablecoin bill getting approved by the Congress last night, heading to President Trump's desk. We'll see. If you think the world's going to run on stablecoins, circle is that's USDC right there. And coin market cap. Jump back here. See USDC. And this is Circle operates this right here. Tether, the biggest. These two companies combined, these are companies. These two combined operate about 85% of global stablecoin market. Right there, pin to the dollar, pin to the dollar. Like, well, how do you make money on anything that's pinned to the dollar? You can buy a bunch of these and you can stake them. That's, yield farming. Or you can invest in Circle. Now, I don't have enough candles to really say Circle is going to do anything. It has potential upside, but it also, IPOs, typically we see some sort of bearishness take hold and we go lower than the IPO. So at some point, I do expect this to come revisit down here. And that's a pretty big correction from 156 back down into the 60 area. But it may go epically higher before we come back down. So things we've seen do that. This one, I have to zoom out quite a bit here. This one went on an epic rally higher. We went from the IPO price around the 20s up to like 200, almost a 10x, a little over 10x. And then we came back down. I'm not saying Circle will do that, but be cautious of the hype. Right there. Be careful. LSE. That's a choppy chart. I wouldn't touch that. I'm getting a lot of alerts. That's a dumpster fire. Reverse split. There's a good one to lose your money on right there. Be careful. Danger, danger, danger. South Korea 3x bull. Man, this thing looks like it's about to break out. Had an epic 10-for-1 reverse split. I probably wouldn't touch it, but I mean, my charting doesn't really work off the lowest low, so there's no pullbacks to. I'm a trend pullback continuation trader. The trend was down. Oh, I just traded something. DDOG. I'm out for profits. So, Koru dipping down. That's the lowest low. Trend is down. This, so far, it's counter trend. I don't know. Keeps showing up on the list, but no opportunity for me in the way I trade. Now, if we pulled back, held something like the roadmap line, and then set up that's tradable. Right now, don't really have much. PLTR is the PTIR's underlying. And cool, it froze. Awesome, there we go. We're pretty much banging on the targets here. Watch out. Conditions are ripe for a big retrace. Just like they were right over here. Now ripened up the potential for a retrace. If you're long PLTR, know where your levels are. people are like, how do I protect? You got a few options. So you can put a stop. Like if you're long shares, you put a stop here. If you're long options, I would recycle them. I mean, that's the, like, book your profit. If you want to continue to have risk to the upside, you're like, well, I'm pretty sure it's going up to 186. Take your profit, put your original stake back on with new options, set the profit in the time frame to go higher. All right, then you booked your profit on that. Now, another way to protect, buy a put. Costs you money. That's insurance. You're hoping that the insurance, you don't have to collect on the insurance, right? That's the whole point. So you don't spend $8 to protect a $10 position, all right? That's kind of ridiculous. You spend, it's kind of like what I did with the 50K challenge account. I have a $100,000 account, 100K account. I spent $400 on protection to protect $100,000. All right, that's what I'm talking about. Like that, do the math on that. And actually, it was $90,000 at the time. I put the 400 divided by, if we do it at like 91,000, I think was probably where it was. I spent 0.4% to protect it. So if you're in a position in something like PLTR and you're like, how do I protect it? You got to be careful. Like protection, buying a put may be too expensive. Like you dive in here and put prices are pretty high on PLTR. You look in here, you're like, what if I wanted to fly out to, December? Whew. These suckers are pricey. $2,000. Even protecting down to $108. I mean, that's pricey stuff. Even if you went to something like this, like the market knows this is going to pull back. Look at the options on this baby. Get some crazy numbers. Look at that. 100. 80. I mean, even way down here, you don't get down to 8. So the market knows this thing is going down eventually. That's the market pricing you out of protection right there. Now you could do a spread. That's how you can lighten up. And that's what I did with IWM. Going back to PLTR. If we know you got support here at 90, unlikely to dip severely below 90. You're wanting to protect. You know that your line in the sand's kind of right here around 120. So you start looking at something like, all right, I want to cover myself out to October. 120. All right, if I buy that, like $11, but I don't think it's going below 90, so I can sell that for $3. So now you're back down to $8. That's not really affordable, right? So you gotta look for something else. Well, maybe I could come down to 110. That's $7. 770, 750 was last price. 750. 90 last price 320. So 750 minus 320. You're down to like $4.30 or so. That's more affordable. But how big's your position? If you're spending, if you need to cover 10 contracts, that's $4,000, 1,000 shares worth. Spend $4,000. Maybe your upside you're looking for isn't going to cover. Is it less than 1% of your risk size? If not, you got to look for some other insurance. Now, or you probably should. I mean, it's up to you. A lot of people overspend The IV here, sky high. Crazy high implied volatility. You know, over 100 is ridiculous, and usually over 50 is pretty ridiculous. There's the at the money IV structure. 1 year out, expecting 65% at the money volatility. You know, pretty wild for PLTR. So there's, you know, not necessarily great ways to protect, and let's see, what was I trying to? PLTR daily. I don't think they have a bear one yet. Oh, yeah, they do. Like, you can buy PLTD and protect your downside. This one will go up, but this one does decay. And the further PLTR goes up, this one keeps going down. So you got to keep your risk at check, in check. And this one is not leveraged, so it's not going to like skyrocket on a pullback. So different ways to do this. And there's new tickers all the time. This one hadn't been around but 6 months or so. NUE. That looks nice. So the opportunity here, this did an initial move up, did a retrace. We need to watch if it stalls here. That's a correction, and we're probably going to go lower low. That zone for that is right here. Now, if we get up here, particularly if we hit 156, this is more bullish. Probably pull back somewhere in this vicinity. That would be an opportunity to load up for a potential move higher. Then could cruise on up to like 180, maybe even a new high. Yeah, because if we push it up to 156, we may retrace back down. Oh, man. We pushed up here, retraced to there, and then pushed out like that. 227. That's the kind of opportunity we're hunting for. This is a nice one right there. Potential longer term play. Marvell. Coming up into that roadmap line. Watch for that gap problem right there. We left a gap back here. Gonna have to fill that. The 618 sitting right on the top of that. And if we reject, could be a first move down, second move down situation. QNTM. Biotech. Not for me. That's a reverse split. Dangerous. Stay away. JBL. Yeah, hitting targets. Next one up, 231. Watch for retrace. Platinum. I already told y'all that that was probably going on up here, 150, 160. Oracle. Hitting targets, 226 next upside, and then 270 above that. Looking pretty spicy. ARQQ. Setting up the breakout here. Might take it up here. 65.98. Sezzle. Kind of speculated we might see that climb on up to 336. That's has no pullback. It's just being ridiculous. Way past. This would just be a crazy extension right there. CLS. Looking for 164 on the upside. LEU. Watch for a retrace. That one's beyond targets. Might go to 215, but it hadn't even slowed down yet, so might be cruising on up to 215. Stuff that's declining or was declining in the pre-markets. RGC. That's with that split in there. I have no idea. Like this may come back to earth violently. CERO. Reverse split. Danger. PGR. That's a So I'm in this right here from back over here. Got long. Just been waiting to revisit the roadmap line. Second one. No big deal. Still waiting. I got long right over here. Look for the target up here at 300. It's my 50K challenge account. I actually have two shares of this. That's what I'm holding. Got a dividend I'll collect out here. This could take 6 months before we get up here. I got into it because over 80% of the time we go higher. Profit factor is over 2. And it's statistically significant. It has all the things I'm looking for. Just a matter of time at this point. Now, might not work out. Might come down. Get the stop. I don't know if I'll stop out because I may just hold it. 10 cents dividend, so I'll make like 20 whole cents. Holding that one. MCD is the other one I had. That one paid a dividend. I got like $3. And $1.77 times 2, so I got like $3. This was pushing down in the danger zone though. It might stop out on the Apollo, but I don't know if I'll liquidate. That looks like a big first move down, second move down, and then we go higher. I might stick it out. Because this is where it plays out. There. Steel Dynamics. Broke through the downtrend, but not showing any enthusiasm for doing anything. IONX. It's IONQs. Leverage. IONQ. Fingers in the right order. And that looks like it's going to retrace. So IONX probably going to get whacked. Now, 2 setups. That look pretty all right. Here's the high. Here's the low. Here's the entry. 493 targets. The numbers 38, 65, 1.3. Don't really like this 65. This is okay. This is, it's not above 2, but it is above the average. So 493 upside potential there. The other one, VITL. Very clean pattern right there. Ooh, wow. Very nice. 32.20 on the upside. Statistics don't really matter on this one at all. Not enough to. Gotta lean on the historical. The proportions here look beautiful too. That 1, 2, potential 3, 4, 5. Might even exceed the target. 32, 37.20. Not a big move, but it's a nice looking one right there. Probably won't have any options. Maybe. I guess it does. Could try. I don't know. I'd be careful. Probably not liquid options. All right. Bias for the day, and then we'll wrap this up. FOMC, 2 p.m. Set you an alarm if you're a day trader. 1:30. Be careful. The market may not do much until that time. May just kind of drift along. Coming back up, we have resistance at this 15-minute roadmap line right here. If we bounce off of that, we may have downward pressure. I think we're just going to go sideways until 2 o'clock. May drift. After 2 o'clock, we've got potential to get continuation lower. There is potential that we go higher, and that resistance would be up here. That completes that 2007 pattern. That scares me. So 61.20, 61.50 up here. I mean, we could start shooting higher. But this setup right here, 5 down, deep retrace, next move down, retrace. That's downward pressure. potentially into July. Be careful, everybody. Count you safe, maybe your own. I'll be in Discord. I'll be here for channel members at 2.